I'm going to try to give you my thoughts on business and economics, a little bit of snapshot on why I think actually India is an exciting place. I work for Bain Capital. It's one of the oldest and largest private equity firms in the business. We were started in 1987 by Mitt Romney, a reasonably well-known person out in the US. And we've been in India for now about 10 years. We're actually one of the largest private equity platforms all across Asia. We've invested a lot of money in India, and actually all across Asia. In India, we've done two of the three largest investments in the country, Genpact and Hero, both of which are north of $500 million. And we recently actually just made an investment, $18 billion company called Toshiba. So we've been a fairly active investor all across Asia. And I'm going to give you a quick sense about why we've actually taken a very positive view on India. I think I personally believe that India is a very, very interesting and exciting place to invest. And if you are ignoring India, you're doing so at your own peril. Now let's first take the rear view mirror on India. If you take a quick look back, the last 16 years have actually been an incredibly exciting period to be in India. Over the last 16 years, India has actually grown at over 7% compounded in a 16-year period. The GDP per capita as well has actually grown nearly 2.5 times in dollar adjusted during this period, from $610 to over $1,500. In this period of time, in 2000, when we started, we were actually the 13th largest economy in the country. We moved up in 2011 to the 10th place. And in 2017, we are the 6th largest economy. And of course, I'll give you a sense in the last slide on where we are projected to be just 5 years from now. You have a lot of pressure on this current government because of demonetization and GST. We actually believe that this is actually very temporary. That, in fact, some of the things which are happening right now are, in fact, very good structural reforms, and they will actually get the country back onto a very high growth path in years to come. And I'll talk a little bit about that as well. Now, some of what is happening is, in fact, aided by deep underlying strong macroeconomic parameters. On the left side, what you can see is that growth actually has been aided by great improvement in, on the left side, you can see improvement in the current account deficit numbers. In fact, over the last 5 years, you can see that just after the global financial crisis, we had gone to an unsustainable period of time when the current account deficit had gone to a very, very high level. In fact, the economy has been remarkably well managed in the last 3 or 4 years. So despite all the noise that you hear at this point of time, this is actually the good news on the macroeconomic front. The other thing that is worth noting is that FDI is at record levels. Now, FDI normally has a lag effect on the economy. When you see FDI of this sort, it means good times are going to actually follow. So when people talk about Achhe Din, normally Achhe Din follow FDI. So when you look at the left chart, FDI levels have been rising, and in fact, in the last 3 years, the FDI levels cumulatively are almost half the FDI that we have seen in our history. So this is actually something which is very, very important and is worth noting. And folks like us who essentially don't care much about politics and are much more just focused on the macro data, we are actually looking at this very, very carefully. On the right side, what has again been happening on the macroeconomic front is that the deficit numbers, the government has again done a very good job of managing the macroeconomic numbers. Of course, the oil numbers have helped them enormously. So combined with benign oil prices and a much better job at managing subsidies, improving tax collection. They've actually brought fiscal deficit down to a very manageable 3.5% level. So step back and think about what's happening globally. Globally, macroeconomic numbers are worsening in most parts of the world, including in the US. India is actually improving its macroeconomic scenario, is what this page basically tells you. Now, there is definitely noise. We actually live in a noisy democracy. Indians, by and large, are noisy families. When you get a few noisy families together, you create a noisy community. When you get a few noisy communities together, you get a noisy state. And when you get a few noisy states together, you get India. And I think that's what our story is about. There is definitely a lot of noise in India. If we didn't have that noise, we would not be Indians. And so at this point of time, unfortunately, there are lots of folks who kind of feel that we're getting to a stage where the party is ending. I think the truth is far from that. There's definitely some short-term noise, and where do those risks really come from? I think it's important to know that. Particularly, this impacts short-term investors. For folks like us, it's important to understand where the risks lie. We are long-term investors. So we do think about these issues, but also I think for policymakers, and of course for the government, people who go to elections, these are things that are important to focus on as well, because they do need to respond to public demands looking at these factors. The first and foremost is job creation. There's definitely risks on this front. And the risks, by the way, are no different from what's happening in the US. This, to some extent, is nothing to do, for example, in the US. When you look at the data, there is no risk to job creation from immigration. Risk is actually emanating from things like automation. There is a need to reskill workforce. There's a need to step back and think about where are the new sources of jobs. So this is a big issue that people need to think about. The second is agricultural distress. Unfortunately, in India, we need to step back and think about how do we deploy 50% of our workforce, which actually still lies in the agricultural economy. And this is a big issue, particularly when we are seeing, on account of climate change, much, much more stress coming on that economy. I actually spend half my time outside of Bain Capital in the social sector, a chunk of that working with farmers in drought-hit areas, and I can tell you that there's a lot of stress coming on them because of what is happening in the agriculture, happening in climate change. It's, by the way, no different from what's happening in the US as well. What you saw in Irma and Harvey was actually climate change effects, and this is a big issue in India as well. In India, we've just come off what we call a normal monsoon. The word normal is actually the most abnormal word today. Because when we say a normal monsoon, 50% of our districts have had normal monsoon. Actually, if you split the other 50, 25% of them have floods and 25% of them have had deficient rain. So the word normal is just an arithmetic normal. And these kind of issues are causing massive stress now on agricultural workforce. So we need to figure out how to address agricultural distress. And I think this is going to be very, very important, because we are beginning to see serious stress coming out, including political, manifesting itself as political stress amongst the farmer community. Bad loans. Now, we've had this is something that the current government has, to some extent, inherited from as a past legacy. The only thing you can probably argue is that they could have dealt with it with greater degree of urgency, but there is a massive bad bank which exists amongst all of India's good banks. This needs to be resolved with greater degree of urgency. We need at least somewhere between 50 to 100 billion dollars of capital injected into our public sector banks to get them back into a position where they can start lending to the extent that they would like to. This is a big issue which holds back economic growth. Fourth, very importantly, low private investment. Because of everything that has happened with the last cycle of crisis, the ability of large entrepreneurs in India to take risk has actually got muted. Capacity utilization in lots of cases is actually low in many cases because indebtedness level is high. The ability to go out and spend money on new projects is muted. So the only entity which is really spending money on fresh capital projects is actually state governments or the public sector at the central level. So as a consequence of that, we are actually, gross capital formation is actually at a historic low. And this is, again, holding back GDP growth. And finally, geopolitical issues. While this is not impacting GDP growth, and I think we've managed to avert a crisis with China, which could have actually been very damaging, there's always some threat, lingering threat of that on the horizon. So there's definitely some, some issues with some noise on, that we need to deal with. Now, for us as long-term investors, we need to figure out, what of this noise can be dealt with, what cannot be dealt with, what is structural, what is cyclical. And I'm going to lay out the case for you on why we believe that, there is still a great opportunity, and how at least folks like us are constantly finding opportunity and looking beyond the noise. Now, there have been an impressive set of reforms in recent years. If you really look at the story of India over the last, 20, 25 years, the last major set of reforms that happened in India was really liberalization. After liberalization, there wasn't one major reform that happened, and we were really running on that one major reform for a long period of time. Actually, over the last 4 or 5 years, there's been a burst of very interesting structural reforms which we think unleashes the potential for the next 10, 15, 20 years. First of all, I think it's GST, which is truly, truly remarkable. I would give credit to anyone who's contributed towards it. And for us, as I said, again, the politics of it is less interesting. What's most interesting is the fact that it's happened. E-governance and Aadhaar, it is truly transformational. It is impacting how people work. When I travel through Uttar Pradesh, particularly in the rural areas, I can tell you that it's impacted women enormously. The fact that they can get a cylinder and spend less time, going out and, having to get wood into their kitchens, was actually made it much easier for them, has made life much easier for them, and was actually a factor in elections. So you'd be surprised how these things are transforming not just politics, but actually transforming life in general. Jan Dhan Yojana has actually been, again, very transformational. Make in India. There are people writing obituaries on Make in India, but something which is as transformational and as important as that takes a long time. It's like the Titanic. It takes time to, make a ship which is as large as that, change direction. We run a $100 billion deficit in our country. We have a $275 billion exports. We have $375 billion imports. We had a speaker talk about in every, I think it was Tarun Vijay, who talked about in every home virtually there's something from China. Why should that be the case? We should have, by and large, we are a scale market. Other than things for which we cannot set up supply chains in India, we should be a market where everything should be manufactured at home. The defense sector, for example, we should be, given the fact that we have the third largest army in the world, we should be a country where we should be able to, force people to transfer technology to us and, be able to, be self-sufficient in defense needs. So we have to get to a stage where over a 5 to 10 year period, we're able to wipe out this trade deficit and get to a trade surplus situation. So Make in India should be not just a opportunity, but an imperative. Demonetization has clearly not gone as per anyone's plan, but think about the private sector. Is every initiative that we do successful? No. In the world of venture capital, 1 in 10 investments, succeed. That doesn't mean we don't try things. And so, I think risk-taking in the government has to, in my mind, increase. bold initiatives have to be tried out. And unfortunately, there are often things that citizens conspire to defeat governments, and that's really unfortunate. And that's the story in my mind of demonetization. But I think, again, I will show you some charts on some interesting data on how demonetization actually is helping in some ways the capital markets. Bankruptcy code, I think there's going to be a great opportunity there, for revival of distressed assets, and then a slew of other acts. So there's a lot of interesting things where you can look beyond the noise, and which gives us confidence that we could be getting back to if not an 8%, at least a 7.5% kind of growth number, which would set us up for a very exciting 5 to 10 year period ahead. Now, let me take each one of the important reforms one by one. Make in India for one. Now, first of all, the purpose of this scheme was very simple. We currently, the manufacturing sector is at an abysmal 17% of GDP level, and the target is to take it up to 25. Not that ambitious, but, it sounds aggressive, but not that ambitious. Importantly, it would create 100 million additional jobs in a 5-year period. Number of interesting measures announced to achieve that. I think all of which, in my mind, are all plausible, are all very, very, tangible, and definitely will help contribute towards it, but will take time to take root. Importantly, for all the people who are writing obituaries of it, there are already indicators, green shoots, that it's working. What are the green shoots? First of all, in a world economy which has been somewhat muted, FDI has actually grown at 30% compounded in a 3-year period. We've seen 150 billion of FDI commitments in this period, which is 50%, as I pointed out, of cumulative FDI numbers to date. We've moved up for the first time in our history on ease of business rankings. And I think, at least for the first time, we're actually focusing on that number. A lot of, attention still needs to come from the states for us to take the next leap forward, but at least now states are beginning to think about this. So for the first time, people are actually thinking about at least, what we need to do to improve our manufacturing competitiveness. There are lots of joint ventures being set up. Typically think of, the manufacturing mindset. It takes 3 to 5 years post taking a decision for something to happen. When you, bring FDI in, it takes 3 to 5 years for some project to actually, fructify. So the real benefit of all of this will actually be seen over the next, 2 to 3 years. So I think we are seeing the early stages of the benefits of Make in India, though I would still say that a lot needs to be done. I personally feel that we're heading in the right direction. GST. Now, we are seeing a lot of noise on GST at this point of time. Now, just think about it. We had the most screwed up tax system probably on the planet amongst all the major countries. When we have tried to transition it, people have been complaining, but essentially what we are doing is we are replacing the most archaic system with a state-of-the-art, purely electronic system. That system converts us from a effectively 27 country market to a single market, and a single electronic market. Just think about the benefits of what that will, impose from a, 25, 30, 50-year period. And all that we are focused on from a media perspective and from a political perspective is how badly it's going. That is just, it befuddles me that that's what the debate has been all about. It's definitely going to have teething problems. And I think the debate has to, at some point of time, move towards the longer term benefits of it. And of course, people will need to, there are lots of people who are getting, who are having teething problems, and folks need to figure out how to address their teething problems. But I think we need to figure out how we can look beyond that to what the longer term gains are. And what are the longer term gains? The longer term gains is that for the first time in since this country's independence, the country can work as one market. That is truly remarkable. You could not in India sell goods as one market. It was easier in the state of Maharashtra to import from China than to sell from Ghaziabad into Mumbai. I mean, it was bizarre, because if you sold from Ghaziabad to Mumbai, to bring a truck in through those 4 states, it would take you 15 days. You could actually ship from, a port in China in a shorter period of time. You didn't have to bribe your way through all the octroi nakas. You didn't have to, go through the complicated tax system. All that goes away. If you talk to any businessman today, they will tell you that it's so much easier today to transact, that because of this system, it has basically removed all the inefficiencies that previously existed. Now, undoubtedly, when you're moving through to this kind of network, there will be issues with uploading forms and, with figuring out how, to make the system work, etc. And we are going through some of that, which in my mind will take 3 to 4 months to resolve. And once we are beyond that, we will see the full benefits of this. There's another issue, vested interests. If you talk to people, within the system, moving to this system exposes a lot of chori. And for those, of you who are, there are a few, Westerners in the audience. Chori is robbery. In India, we've had a completely parallel system, in the business world, of folks who've operated in the cash market. It's been completely normal to walk into a store or a business and transact in cash. And I think a very large percentage of people, maybe 20, 30, maybe even more, percentage of folks actually transacted in cash. GST actually puts enormous pressure on them to not be able to do so. And so today, what we are also facing is actually a big backlash against by those vested interests. And so I think and this is going to manifest itself as higher, tax to GDP ratio, which I think is critical, and ultimately, hopefully, lead to lower taxes as well. So we are actually very positive as investors. We are extremely positive about GST. It's going to result in supply side efficiencies. It's going to ultimately, we think, result in higher tax to GDP ratios and eventually lower taxes as well. And we think it's actually the single biggest reform measure that India has introduced since liberalization. The third is financial sector, and I think this is really important. And this is probably where a lot of the debate on demonetization has actually not got focused on. If you focus on the chart on the left, it's really interesting. India is a market, and particularly the ladies in the audience will appreciate this a lot. In India, people used to love to buy gold. The amount of gold that gets bought in India is non-trivial. You talk to the World Gold Council, they actually have a large office in the country. And so if you look at how savings get deployed in India, they get deployed extraordinarily in gold and then in real estate as an asset class. And actually, a lot of this happens at the expense of financial assets. And who pays the price for that? The price is paid by the rest of the economy, as a consequence of which the cost of capital in the economy actually rises. And the chart on the left actually gives you a good indication of that. Going into just post the global financial crisis, the economy started paying a massive price for this. We started seeing a big surge in physical assets to the stage where just after the global financial crisis, people started actually, completely putting money at an alarming pace into gold. And we saw 60-70% of money going into that asset class, completely useless as an asset class, other than from a speculative perspective, and money plummeted into other financial assets. Now, what has happened is, fortunately, we have seen some of that reverse, and you can see from fiscal year 16 onwards, and actually with demonetization, we have now seen, for the first time in history, those lines crossing. Now, shift your attention to the graphs on the right. What you're beginning to see is that equity as an asset class and mutual funds and debt as asset classes are beginning to get a lot of capital. What's happening is people are wondering, why is actually Indian stock markets expanding? Now, it's important to step back and realize that for the first time in our history, Indian markets are actually expanding despite the fact that foreign investors are not putting money into India. Foreign investors have actually been pulling money out of India. The reason why our stock markets are expanding is for the first time domestic investors are actually putting money into India. Now, who are these domestic investors and why are they putting money into India? All the money which was lying in mattresses has gone into bank accounts. The money which has gone into bank accounts, they're realizing, why should I keep my money at 4%? So that money is basically going into mutual funds. And the money which is going into mutual funds is basically then going into the stock market. As a consequence of that, when you look at the chart, you realize that actually our equity ownership is amongst the lowest in the world. We own 4% compared to China's 9%, Japan's 10%, the US is 34%. So actually, Indians have not participated in wealth creation in India at all. The wealth creation in India has all been owned by people in the US, UK, Singapore, and elsewhere. For first time, wealth creation is being enjoyed by people in India. But essentially what is happening is reallocation of asset classes is happening, and a lot of that money is essentially is basically the money that is coming in from demonetization into financial assets. And of course, who's the other beneficiary of that is the government, because some of this money is going into fixed income, and it has actually put pressure on government bond rates. So there has been a benefit of all of this, overall on the economy. And this is exactly, another chart which shows that same argument in a different way. You can see a massive increase. FY17 has actually been the best year for the mutual fund industry in the country. I mean, if you talk to mutual fund managers, they'll tell you they've been waiting for this year. They've never seen this kind of a year in the last 15 years. This has been their best year ever. So let me try to wrap this up with my last slide. Now, we've been in India for 10 years. And I often tell people that actually India has been a great market for us. We've deployed nearly $1.6, $1.7 billion in India. And I know that a lot of you are investors in the US as well. I can tell you that for us, India has actually been a very profitable market. We have earned over a 20% dollar return in India. So I don't know what kind of returns you all make in the US market. I know generally the Dow gives some low double-digit kind of return. India is not a bad place to make money. Even local stock market returns have generally been in the 13-14% range. So it's been a good place to make money. Most people trade. I would not trade in India. I would invest in India for the long term. But if you step back, ignore the noise, there'll always be noise. But if you ignore the noise, there are actually very, very few places in the world where you can actually make the kind of money that I think India potentially will allow you to make. India is 15 years behind China by any parameters. You look at steel. We are a 90 million steel market. China is 900 million. So if we have to build, like China builds over the next 15, 20 years, we'll still not get anywhere close to where China will get. We still will get, even at the halfway point, even if we grow at 8%, we'll still get to the halfway point. There's still a massive opportunity for us to create enormous amount of wealth. So if you take a structural view on what kind of opportunity exists, we can easily grow for 8%, 9%. If we actually take some of the noise out, we are actually able to do good structural reforms. We can even grow at 9 or 10%. But certainly we can grow at 7.5%, 8% for the next 5, 7 years. If we grow at those levels, this market can easily give 15 to 20% returns over a long period of time in rupee terms, and certainly, even if you adjust 3-4% for exchange rate, it can give you, a great return from a dollar terms. And from an economy perspective, with that kind of momentum, we would be, the fourth largest economy in a 5-year period, and with the potential to become the third largest economy in a 10-year period. I'm sure that's that's the country that all of us dream about. But certainly from Deepak talked about the work I do on the philanthropy side, and I think Tom made some interesting points as well. I would certainly end by saying that while all of you all do what you do, the one thing that I would certainly urge you to do is do more on that front in India, because while all of this happens, I don't think the trickle-down effect, back home, both from wealth creators in India or from people here, reaches people back home at the speed that it does. So the one thing that you could do from the villages that you come from or the cities you come from, if you can do things for people back home to bridge the gap, anything that you do is I think is great, but honestly is not enough. There are at least 200-300 million people back home for whom the disparity with all the wealth that's getting created is unfortunately only widening. So while I end with this high note on the great opportunity we have from a markets perspective, I'd also say that we have a great opportunity to bridge that gap as well. So I'd urge you to act on that front as well. Thank you, Deepak, for inviting me, and it's been a pleasure being here. Thank you.